Great, so next up, the unseen backbone. Compliance, transaction monitoring in Web3 banking. This is a very relevant, very interesting topic, so I'm glad to welcome on stage an esteemed panel of experts, starting off in Julia Bondarenko from Sumsub, Lucas Betschart from 21 Analytics, Dr. Justus Delp from Merkle Science, Dominik Hofmann from MME, Daniela Rosa from banker Zarattini, and the moderator for this panel will be Ekaterina Anthony. Ekaterina is also board member, fellow board member of the Crypto Valley Association and the chair of the AML and Compliance Working Group in the Crypto Valley Association. The floor is yours. Enjoy.
Thank you very much for great introduction. Hi everyone. Good afternoon. Let's try to make compliance not only boring thing but also fun. I ask my colleagues of the session to be creative today. Just a couple words from my side. When in 2017 I started to work with crypto and to do compliance, people really, especially bankers, they were, if they know you are from compliance and you do crypto, they just take a distance 15 meters. They don't want to talk to you. And you feel like you are very different. Today, they really want to talk to you and they invite you for lunches just to get some insight how to manage crypto and how to help clients. And I think it's great we have today experts from the different parts of industry, people who produce reports and people who work with real clients in banks. And I suggest we go one by one. You can introduce yourself. In the same time, you can already give you idea about what basically for you Web3 banking and compliance for Web3. Do we really have compliance and Web3 banking? We start from Dominik.
Okay, thank you very much, everyone, and for having me here. My name is Dominik. I'm a legal partner at MME. I'm in the crypto space since 2016, so I had the chance to start with the initial wave of the ICOs of the big Layer 1 foundations and grow more and more into regulated business as well. And hence learn a bit from the entire journey, from there was almost no regulation to more and more sophisticated compliance regulatory frameworks applicable. And for me, as a lawyer and as the standard should be, it's tech neutral. So there is no Web3 banking or Web3 compliance per se, but the technology has specific challenges and specific solutions it can provide for compliance work. So I would say it's tech neutral, but always with this technological understanding you need to have of how Web3 really functions to apply the rules.
Hello to everybody. My name is Daniela Rosa and I work as a director in the private banking department of Banca Zarattini Lugano. Since 2017, I have been in charge of a specific desk that deals with blockchain-related clients. What is Web3 banking? Features that traditional banks struggle to understand.
We're here to help you.
I hope.
Okay. I'm Lucas. I work in Bitcoin since 2014. I say Bitcoin because back then there was no crypto and definitely no Web3. That's all. We like to make up new terms every few years for the same stuff. I think this is rather not helpful. 5 years ago, I started a company called 21 Analytics where we do software for travel rule, everything transfer in, out. Have a tech background like most people that are in Bitcoin for a bit longer. And yeah, Web3 banking, let's say Bitcoin banking makes it a bit easier. Also, if we hear before, most banks actually they at least start with crypto. That's what they do. It's also easier to understand, but in general, it doesn't matter which asset it is. At least according to FINMA, same should all be the same, but maybe in practice not so much. Yeah, I'm sure we get into that.
Okay, Julia.
Thank you. My name is Julia. I'm here with Sumsub. We are a provider for banks, for crypto companies, and we started also already many years ago with crypto companies as a KYC provider, just onboarding parts. But now, looking at how Web3 evolves, how important it is to see what happens beyond onboarding, we are also discovering Web3 space and showing how companies can comply it. So we're partnering with clients and partners like Merkle and 21 Analytics and others, just to provide the solution for Web3 banking, which will help them to understand better what is happening with the money inside the institution, and when it's leaving the institutions, also what is happening there. So Web3 for us, I think it's the big field of opportunity, which is often confused between different parties. So someone just relate only to crypto when speak about Web3. Some others think that it's purely DeFi and protocols, technical stuff, which is not related to any other activities. So for me, I think I'm here to define it with you.
Yeah, hi everyone, my name is Justus. I come from a research and advisory background, been in the blockchain analytics space since 2021. And yeah, looking forward to this discussion. I think echoing all the other thoughts, I think Web3, there's not an official definition for Web3 banking yet. So for me, it's about the intersection, I think, between on and off ramp and Web3 experiences. I think the two haven't been seamlessly linked just yet. And I think we're seeing that interception starting to build out as we see wallets natively offering on and off ramping opportunities. So looking forward to the discussion.
Great. So what I understand from your introductions, we have a crypto banking, so we should not deny it. The question is how to deal with it, and we have maybe not majority, minority of banks who are already trying to deal with crypto, and they all a bit scared, they don't have enough resources. And I immediately think about AI. Why don't we just teach AI to do this, and we can just sit here, talk, and it will check millions of clients per minute, I don't know, and give us all the information, statistic, and block transactions. Sounds a bit, you know, like a future, but maybe it's a real situation for us maybe in 5 years. So what do you think about automation and possibility you know, for onboarding and transaction? Do you see any challenges, or is it possible just to automate everything?
It would of course be amazing if you could do it, but to be honest, the point is a bit with all the AI applications, you need to be able to explain how it works and to be able to like supervise the results of the AI tools. And that's also like a requirement FINMA has already published in this regard for AI in finance in general, and it's in line with global regulatory efforts. But what I think it will be a staggered approach. So first you can start with simple tasks that someone also in the traditional words would have to supervise. So where you can say, okay, I need to look at the result and I still need to double check. So then you can like save the first step. And then on and on, the better the tools get, the better supervisory like controls get, you can automate more and more. And it's also something I think we come to on later. Very important that also regulation and compliance adopts technology, so to make it smarter. There are new possibilities, and I think you can win a lot by applying new technologies to compliance and make it really efficient.
I think it's a good point, Daniela. You work in a bank. Is regulation, for example, in Switzerland, allowed you to automate compliance for and to be more friendly with crypto onboarding? I know that you work with the Swiss Banking Association. You help a lot with new guidance for banks. Maybe you give us a couple of words about it.
Yes, of course. So our crypto activities began in 2017. When we started meeting the first clients that had a nexus with blockchain. Already then, the big challenge of those years was to figure out how to deal with new digital business models and also how to integrate their specific features into a banking environment that needed to comply with fast evolving regulation. Being part of the Crypto Valley ecosystem was a big support because we had the possibility to exchange our views, to interact with other stakeholders and also to share concerns. Thanks to these interactions, we were able to adopt our first internal directive for the onboarding of token issuers, exchanges and crypto-related clients already in 2018. Let's say that thanks to our practical approach and in-depth knowledge, the Swiss Banking Association invited us to contribute to the revision of their guidelines for the opening of account in favor of blockchain companies. They had released the first edition just a few months earlier, and we joined the group in order to provide additional guidance, specific instructions, tangible instruction to banks for the onboarding of crypto-related client. It was 6 years ago, and now 6 years later, I can tell you that I find those guidelines to be still relevant because still today they provide valuable insight. The situation has completely evolved. The landscape today is completely different. With the rise of DeFi and the consolidation of Web3, additional challenges emerge. However, the compliance people I know as the least bored people I know because they really love this part of their job to always face and overcome challenges. Of course, also an alignment of views of the industry in order to work together towards a standardized solution is also quite important. And I would like to stress the big effort and work of this sector association as Crypto Valley Association, but not only.
Thank you very much. I think that we need to look at this guidance again, and maybe they need to be updated on a yearly basis because we have so many changes all the time. And I know that painful topic is for us transactions, especially in Switzerland, because we are very different from many jurisdictions, even we are more strict than FATF suggests us to be. And Lucas, I think you can say some words about what can we expect and in terms of travel rules and monitoring the transactions. What's your opinion? Will the technology win or regulation?
Well, let me go back to the AI question quickly, because I often see on LinkedIn influencers about software engineers going to be obsolete because of AI. Those influencers are usually not software engineers, so me as another compliance person, I'm going to say now, compliance people are going to be obsolete thanks to AI. No, I'm just joking. I think it's a good addition, like with the software engineers, if you don't know what you're doing, it's not going to be good enough. You still need to be an expert, so at least for now and for a very long time, probably. Yeah, travel rule, I mean, is the same as every year. It's very much a pain for everybody involved, especially in Switzerland. I mean, I say that on panels all the time. FINMA really hurt our industry by enforcing it just on Swiss players.
Do we have FINMA here?
I mean, they probably heard that before from me, so it doesn't matter. By enforcing it only on Swiss players who are based in Switzerland, and all the other players, being Kraken, Binance, all the big ones can serve Swiss customers, don't have to follow the rules. So it's really like hurting ourselves. While the EU at least said like, okay, if you have customers in the EU, you need to follow EU rules. Okay, the EU can also enforce it much better than we can probably, but this really hurt our industry. I do not think it was a coincidence, or I mean, it was an accident. They really knew what they're doing, or at least they could undo it if they wouldn't know. And yeah, it doesn't look like this is going to change anytime soon. Although there are, I mean,
But if we look at, let's say, Escape Switzerland, in EU, do we really see the usage of travel rules intensively? And maybe we explain to people from banks what does it mean, travel rules? Just a couple words.
Oh yeah, I mean, it's just if you transact from one financial entity to another, you also need to send along originator and beneficiary information. So, but you put in your IBAN, name and address. That goes through SWIFT or SIP or whatever. That's built in. In Bitcoin, it's not built in. So, but you still need to send this information. It's not really what Satoshi mentioned, but of course the regulator said you transfer assets from one place to another. You need to do the same. Doesn't matter what the asset is. So it's also not a surprise.
So from compliance point of view, it's a good idea to have it like a SWIFT, but we don't make it for everyone the same. We still have different providers, and we can be, you know, like creative. It's not like one entity control everything. Yes, this is good. But as I understand, we're still not progressing. Yeah, with the travel rules, which big help for compliance, but not.
There is progress, but I mean, EU at least, it helps Switzerland that the EU players also have to do it. But a lot of them are rather relaxed still.
Yeah, I think it's because of grandfathering part when they say, yeah, we're taking it into force, so now everyone should be compliant, like since December last year. But then like, oh wait, in Europe we have so many countries and they're so different. Let's give one country is like 18 months, then others 12 months, others 6 months, some others 9 months. So it's really confusing sunrise effect, even for the like technological companies. When you get the transaction, you want to verify it according to the rules, but different countries are adopting it differently. So one WASP can be compliant, other will not have adopted technology, and the technology is not implemented, then they need to use this risk-based approach. And then the question again, what is risk-based approach? Should we consider this transaction high or not high? Because even like thresholds for the transactions are different, I guess. You can also just...
Yeah, but for the grandfathering, I mean, it applies to MiCA, but not to TFR, at least in our opinion. But this is always depending on which company you ask. And most of them, I mean, the smaller crypto companies, you know, sometimes 5 employees, 10 employees, they're going to avoid it as long as possible.
Because it's also always a question, should the company be regulated by this rule, a travel rule, or MiCA or not? And then we need also to group them between each other. So who is regulated, when the transaction should be checked and when it's not. So for instance, when it's...
But do you think that the role of regulator to control when we do something, they need to control if we do it right, if we comply, if we do all the checks, but not at the beginning, yes? Just before we start to doing it.
They will come back to you later.
Yes, it just, sometimes I feel like compliance officer also that we have too much regulation that it's prevent from starting business. And it's a question, what's going on globally? You travel a lot, and I also know that for many people it's a black box, you know, how we identify wallets, how we basically allocate the risk. And what's your experience? What is the direction with the compliance in the area of wallets and identifying and how we tackle DeFi for banking?
Yeah, I think that's a really good question. Considering that like the travel rule basically tries to make the whole blockchain world transparent and understanding like which wallet belongs to which owner, whether it's a private wallet or an exchange-made owner. The whole infrastructure of the blockchain was set up to not provide that information to begin with. So we're really trying to turn the system upside down. And I think that's a huge challenge on compliance people, trying to really implement the transparency that wasn't intended to be there in the first place. So, you know, I think it was a bit rushed to expect the enforcer of travel to be perfect to begin with. But now I think there's more and more systems like Sumsub, 21 Analytics, and other providers trying to help with this, to provide this transparency in the exchange of information between service providers. And yeah, when it comes to Web3, I mean, Web3 was meant to be a DeFi space, a space where people have a completely different experience by showing their identity via the wallet. And I think this connection with the travel rule kind of bridges that transition where your identity is linked to your wallet now versus your wallet being something that is not associated with you. So that's interesting from a compliance standpoint.
But this is a good question, maybe Dominik, to you as you are a lawyer. How we can breach real banking sector with DeFi? For me, sometimes I don't understand how we can technologically wise, regulatory wise, because DeFi by default is not regulated.
Exactly, good question. So what we see, and it's a global challenge. So we have often contact with a lot of projects which are located outside of Switzerland, and they often face the same problems. And in case of DeFi, the main issue is anonymity and source of funds. So if you have a prudentially supervised institution, you have an issue to interact directly with something where you don't know who is behind this and where the funds are deriving from. And generally, there are like two layers to differentiate. One layer is institution interacting itself with DeFi. That's quite difficult at the moment due to like the due diligence duties they have to identify the counterparties, to know with whom they work. Here you can work, for instance, with closed pools. That's not so interesting outside of the institutional world because you want to get as much liquidity into it as you can, but also new ideas are coming up about zero knowledge proofs where you can at least ensure that only verified persons are in the pool. You don't know all of them, but you know a certain standard has been applied, and that's something interesting to discuss with regulators, how this could be evolved. But other than that, as a prudentially supervised institution, now you have an issue if you want to directly engage. The second thing is if you have clients which have interacted with DeFi and you want to onboard their funds, you also need to check their source of funds. You have to make a wallet checks where the funds were, whether they have been tainted. And there is always a bit of thing how deep all these chain analysis tools really go into the DeFi space. So do they just pose a flag, has interacted with a lot of DeFi? You have a flag and you don't know what should I do, shall I onboard it or not? And likely not if you don't have the resources to go deeper into it. Or will there be like a more detailed assessment? Because also within the pools you can check where the sources of the funds in the pools, where have they come from? Are there funds which have been derived from a hack or from fraud? And you can get a lot of information out of the blockchain. And that's so interesting of the blockchain technology. There is a lot of solutions in the technology to a lot of compliance problems, which I would propose should be more and more leveraged to really bring that on. You can look very deep into these pools. And also I once tried to argue that there are even dogmatic rules which say you can't even do money laundering with the DeFi pool because it's just one additional step on a paper trail that doesn't really obfuscate anything. But of course, for regulators, there needs to be more confidence in that.
But when you list all these requirements, I just imagine if you're a normal compliance officer in a bank, for example, how can you deal with all this? You need a special knowledge. It's absolutely like a new profession. So we will see that we will have a shift in what will be the requirements for the compliance officer in the future. So maybe, Daniela, how the bank preparing for this? Do you have like send people to the IT schools or what's happening really?
Okay, thank you for this question. When we started offering services to crypto clients, we got a lot of criticism from fellow bankers. And we really struggled to convey the message and how transaction monitoring works in Web3. So, an important caveat, I'm not a compliance person, so forgive me in advance if I'm not using appropriate terminology. So KYT monitoring and risk assessment are fundamental aspects of compliance along with KYC. This is the case when banks are involved in crypto-to-crypto transactions, but also when they accept fiat transactions as a conversion of crypto, of trades. As a traditional bank aiming to transition towards a more hybrid model by integrating Web3 features, we seek the opportunity to offer to our clients the possibility to deposit crypto inside their bank account. In order to be prepared, we have already drafted an internal directive, already audited by Ernst & Young, that outlines specific crypto compliance measures to be carried out. And this directive already serves as a reference when we accept crypto-related fiat transactions. So KYT monitoring is performed through the use of crypto forensic tools. So we do evaluate the history, the transaction history of the wallet in order to make a risk assessment. We do evaluate several risk dimensions, including direct and indirect exposures to scams, to darknet, to ransomware, illicit addresses, sanctions, and embargoes, just to name a few. And when a blockchain address interact with a centralized entity, it is also important to make a due diligence and a risk assessment on this centralized entity. It goes without saying that with the rise of DeFi, the situation becomes even more complex. So when a blockchain address has been exposed to a certain degree of DeFi, of course, additional evaluation needs to be made. We tend to apply a case-by-case approach. And when we find blind spots, we usually combine traditional compliance. So it's always important to understand source of wealth, source of fund, and having a clear indication of the client himself. And we combine these traditional compliance checks with enhanced KYT monitoring, in order to be able to detect specific pattern behaviors and transaction history checks.
Thank you.
Yeah, I think I would like to add on this because, so Merkle Science is a blockchain analytics provider, and like one of our key challenges is helping the people to use the tool like effectively. And I think the point that was just made by Daniela is that, you know, that's a really steep learning curve for a lot of people. And there's trainings available, but yet like being able to have a sound judgment based on what you see on chain is really difficult. Like Dominik mentioned, especially when it comes to DeFi, when you have someone that, you know, has done meme coin trading, maybe he's been active on various DeFi pools. If you come to a bank today and say, hey, I made, you know, 100,000 in the past 12 months on trading, on DEXs, on arbitrage, that's a really difficult thing to prove. And then having a compliance person verify, even if you come up with your full spreadsheet of transaction hashes, it's still a really, really big uplift. So I think automation and having abilities to make this cross-checking easier is really essential to allow people to, you know, have the chance to become part of the banking services, to then have the ability to prove themselves, and also to scale like the official transaction monitoring programs. Like when you ask CEOs, you know, what's the key challenge in compliance? It's scalability, because you don't want to have 500 people working in compliance. You want to have 500 people working in like revenue generating aspects. So I think that's a really interesting point you made there, Daniela.
What I hear, we need automate and outsource, right? So Julia, I think Sumsub is a very successful case, because I tried to subscribe to your services. I'm waiting already 1 week to get the answer. It's because you're overloaded, right?
Noted. Yeah, I'm deeply sorry. Even our automation has a line, because we also need to do due diligence.
No, it's a good sign. You know, you are very in demand. I'm not criticizing you.
Yeah, it's crazy. Now we're over 1,000 people, and demand generation is working well, and then it's all stuck on the compliance as well. We're doing due diligence still sometimes really for a long time because of the demand, but again, coming back to the automation and also like mentioning AI, it can simplify work of the compliance teams, and there are tools that can combine different solutions in one place, and all risk like approach on metrics and everything that are used by compliance people can be put into the policies. But still, I personally believe that we cannot fully get rid of compliance people, because we need someone to put this policy in the AI tool, and we need someone to carry this responsibility. And this is the key, I guess, direction where we as a provider going. So we want to make compliance people life easier, so they don't take all these hashtags and don't look at this. They just write policies, automate them, prove that it's working policy, and just control what is happening, again, being more scalable in that regard.
Yeah, the regulation suggests us that there is a compliance person, it's a responsible person. It's a final decision maker. But I still believe, you know, if you have 10 or clients like in private banking, you do it not on the active mode, but if you have 1,000 clients per day, I'm sure you have to automate. I can't imagine the AML officer sitting and just clicking in each, you know, case because he has to prove 1,000 of the cases in 1 hour. It's not possible. So I still believe we can get to the point that the regulator will approve automated AML officer, which will be AI probably and smart contract.
That would be cool then for our companies, I think.
It's just a fantasy, but Lucas, because you are IT related person, tell us, will we have the AML officer who will be artificial intelligent?
I mean, who will pay the fine in the end? You know, if something goes wrong.
The owner of the business, of course.
Okay.
And he will go to prison if something wrong. It's his responsibility. But the question is how we make the process automated. And then it's scaring, because if we can automate everything, when we have a consolidation of the market, because we don't need a lot of institutes, right, to provide services, probably.
I think if you now as a bank focus on what is really decentralized finance, meaning no website, no CEO, no mailbox, there's only one, there's Bitcoin, right? If you only focus on Bitcoin, which is, like we hear from Zürcher Kantonalbank, 88% of their traffic anyway, or of their what people buy, then it's much easier. You can automate so much more. You don't have all this, the risk scores are much easier. Everything gets much easier if you just focus on Bitcoin, and you also make the most money with Bitcoin. So as a Swiss bank, I just focus on that, and you capture most of the market, and you leave the Trump tokens to Binance and the others. Yes. And then you can also have a way more automated compliance.
Sounds good. I think we have, I can see 4 minutes left. What I suggest, each of you just give the maybe advice to the industry. Just short one. We start with Dominik again.
Thanks. So my advice or wish, so to speak, would be regulation is coming more and more. It's a global phenomenon. So we also had calls with Cayman councils which said, okay, this company we cannot set up in Cayman because of the compliance issues. So it's coming globally, and I think it's very important at the moment that we build smart regulation. So we take it as an entrepreneurial challenge. We don't say it should be as low as possible. No, it should be efficient, but it should not hamper innovation. It should not hamper business. We should leverage all technological elements which we have, what the blockchain provides, what AI automation provides, and to find a solution and to build solutions which make a very sound compliance possible. And on the regulatory side, it would be very great to have like an openness to think in these new possibilities as well. So not to go much lower than today, but to find another way to achieve the same result more smarter and more efficiently.
Daniela?
My advice to the Web3 banking industry is to leverage technology to enhance KYT monitoring, to work together towards standardized compliance solutions, and to collaborate with regulators when possible.
I would say if you're a bank that does crypto, but do not allow for transfer in and out, meaning only custody and brokerage, you are not offering anything that is more interesting than just an ETF.
Okay.
A Bitcoin ETF, I mean.
You giving advice, investment advice to compliance people.
I agree with Lucas.
I also totally agree with Lucas. But I will give another advice that we need to build feedback with regulator, with banks, with technologies that they use. How is it working? Does it actually working well for everyone? What works well? What works bad? And don't be afraid to experiment and then just to say like, yeah, we tried, maybe it didn't work as we expected, but still we're on the right direction. So I think this is what I would suggest.
Yeah, advice. I think one thing I'd like to address to the banking or financial institutions in the room is that I think Web3 sounds really scary, but actually when you work with the Web3 companies, a lot of them doing transaction monitoring already. To give an example, we did an integration with one of the leading Web3 wallets. They're screening every transaction that happens either on their routing contract for staking or swapping. So, you know, there's obligations as soon as there's custody. And I think when you talk to wallet developers are really focusing on attack, but then there's also the evolution of, you know, you have to really make sure that any money that is being used by your wallet is also safe and sound to use. And I think that will help with the connection, bringing Web3 and banking together, like understanding that there is actually an alignment of what the eventual standard will be. So I think that is something I'd like to put out here, which is more of an insight rather than like a direct recommendation. But I think it shows that, you know, there will be one standard one day, we're on the right track, and I think Web3 will be safe to use moving forward.
All right, let me conclude. We don't give financial advice, but ETF is a good thing to consider, you know, not because of compliance, just in general. And I think that the tools like Sumsub or any other tools will evolve and probably take more roles in the current onboarding and monitoring, where the banks, they don't need to probably hire a lot of people. They can just outsource the compliance function and automate it as much as possible. But we can't probably automate everything. We still need a human factor. We need to have people sitting and controlling the technology. And yeah, and we need to use technology in a wise way. And what is important, we have to communicate with regulators and try to develop more, let's say, applicable, possible standards, which not only looks good on paper, but we can use in a practical experience. Yeah. So it's 0 minutes now. So thank you very much for being here, and I'm enjoying talking to you guys. Thank you.
Grazie a tutti.
Thank you.